Yeah, so I wanted to just look at a few things as far as GB level going into uh, I believe the last week of Feb, right? So if you look at starting with the 4 hour, then the 2187, 2187. So this is where we came from, okay, in the 2187. We went past it, equilibrium, been in this range, and we have taken out, uh, you know, this is a PO3 stopper. Okay, so the stop run has happened as well. Um, so now this is the context in which we are, and what we also see as part of this is one thing is to note that the 4 hours is that what is being respected in this. I believe so. I think the bodies, if you see, you can make out that it's the 4 hour which is being respected. Now, there is a lot of, unmitigated stuff hanging around over here, which failed to reach. These were fine. They reached the main levels, but especially this low, these lows, okay, they're not yet mitigated. Okay. So when I see that and that we are in this dealing range, back in it, then I wouldn't think that this will just turn around and go for all time highs. And there is more to it. So let's look at it from 729, okay, which is where the 1 hour will come into play. Okay, so the 1 hour is being respected by bodies in this. This is what it is. We were earlier, we had left this range, and in this range, when we went here, I was saying when we were here, this is not, in fact, when we were here somewhere is when I started saying that this is not the way for it to work. Okay, the way it has left from here is not the right way. And so I was not thinking going into Friday, well, we'll have any kind of bullish run. And we got that turtle soup and I took this entry. Right. So, and I've been saying that it has to come and do a stop run here at this red line. And then, yes, it can again go into the range, but unless that happens, no chance. This is not going up. Okay, so um, so now if I half shift it, mm, you get a different idea, right? So when actually we were doing that over there, one needs to look at the half shift and see what has happened. Look where it went to the extension, right? And then it has been fooling around in what was the equilibrium where consolidations are likely to happen. Okay, so that's what the story is. Now we got a rejection block over here, and if we look at the quarterly cycle, this rejection block falls in the previous quarter. If we're looking at it, then this is an SMT, and if you compare it with Dow and ES, you will get that this particular SMT there, right? So the moment we rejected here is an opportunity to turtle soup. You don't have to wait for order block to form, something to happen when you have your bias. It's not going up. It is Friday. You have unmet, uh, for example, this week it's an unmet thing. I've been saying that, okay, when you're leaving it here, we're leaving, failing to reach levels. That's all um, going to become low resistance liquidity run for later. Okay. So as we came from here, the breaker held it, right? So breaker held, sent price up, did that thing, and then we got the distribution, right? So one would say at that point, and if I was also extremely clear, I will not want to take like partial here, because it's going to equilibrium. That's what this is going to do. And then you have to look at the quarterly, previous quarter low is here. It does wick from here, leading to potentially some kind of buys. But at this point in time, your stop run has happened. See, when this fall happened, there was no run above the high. And those are always suspect. Even if you have this fair value gap here in the fair value gap area, it's not going to work out, right? So you don't need that SMT, manipulation, all of those things have to come together. Now, when this happens, it's almost guaranteed either at this mitigation block or here. And when we leave this as a wick, again, it's leaving it for when? For being taken, right? So failure to reach those will be taken. Um, so yeah, that is what has happened now. Going into next week, what would one basically look at? So you still go back to 187, uh, right? So we have these unmitigated stuff from 4 hours. Okay, so I believe, see, either this will be sensitive. This is the extension. Look at that candle, how it tapped into that extension, and it's coming here. This is the extension. Okay. Sorry. Yes. No, I believe this LV area is the extension of this range. Let me show you. If I add +1, which is the same thing above, replicate it on top, you see that yellow line, right? So yellow to yellow. Basically, the this F area, not here, yeah, here only. Okay. So now this is something to watch out for, like considering Sunday or how it opens, gap up down, Sunday or Monday making the higher low of the week as a function. We have to look at it from that perspective. Okay. And the other anything else that I see, this particular dealing range. Okay, I'll just try to make it a color that's maybe more visible. Okay, but this red line is kind of falling into the middle of this dealing range, which was met earlier. So even the top of this could be sensitive. At this point in time, this dealing range 50% has not been met. So right now, I would say think of it from this perspective that this dealing range low mid has not. This dealing range midpoint has been tapped. We have this minor sell side and the liquidity void area high is here again at the minor sell side. I believe if Sunday we get something like this or Sunday, Monday first is this, then I would consider looking at the low of the ceiling range or actually the middle. Okay. That and not for Monday. Well, Monday could do it if it's a uh, you know XCMD kind of a situation, but and we didn't have the TGIF as well, but TGIF doesn't take us that far. So those are things to consider. But I'm saying going into next week, what kind of a profile to expect? Um, is where essentially I'm coming from. Okay? So yeah, I mean, this is unmitigated stuff, equal lows. So definitely you have a 4 hour Pay Valley gap over here, which it had failed earlier, right, to even come here. So it's possible it may come to this liquidity void. If it's just coming straight down with not too much retracement, then I would say this would be a point of interest for me and perhaps make more liquidity in that situation. At the same time, we have this particular 4 hour, one can say last fair value gap, and we did on the daily create that inversion, right? So the inversion low, mid of the inversion is also this dealing ranges low. Okay, so I would say these are kind of like my uh, points of interest. So just gonna make it nice and clear for myself what I will be looking at, right? So the low of this, then we have the extension which aligns with this. I don't know if it's an order block, but right. Then we have this I of the 4 hour. So if we go here first, we get a reaction. I would expect it to reach to these levels. If we go here first, perhaps, right? And again, it's not for Monday, but Monday we might potentially have any moves. So let me remove all of this and go back to 729. So right now we have to see if we are going to be in this half shift where this low is very near to the low. So if we come down directly, this could be a potential manipulation to then maybe go towards these targets that we have. But if we are going lower, then in the half shift only look at where the extension will be, which is here, which matches this low. LV. LV is always important. This is where our 4 hour fair value gap is also. Okay. So a lot of times if it is coming into the stealing range, it's only coming to tap into the LV. That's below these equal lows as well. So, and if we totally come into this dealing range, then of course we have the equilibrium, we have this area. And then you'll have to see at a certain point in time, where are we on the zero, right? So going back to 1 hour, it came from the previous dealing range, came to this LB breaker also. A lot of the times this has a potential for uh, some kind of retracement, right? And yeah, I mean these we'll have to see how things play out. And one more thing I wanted to maybe show you here is, see, in this dealing range where we are now, where we have the turtle soup, there is a liquidity void. Okay, and this 1 hour, if we want to say entry gap, see this at the level of liquidity. So I don't know how we look at that breakaway or whatever, but this is also an interesting place, and I marked that here as well. Okay, that's also kind of the high of the daily inversion. Okay, over there. So on the upside, I think I'll be keen to see, you know, these particular levels. If it does not reach here and it's just going, then the levels to watch out for will be like mirroring. So if we turn around from here or this FE area, then we might be looking at mirroring, right? So mirroring could happen. It could be a consolidation sort of scenarios. You can destroy a scenario at some point in time. But yeah, basically we are back inside this particular range. Okay. So yeah, I think that's just something I wanted to give you. So when you're looking at things, and then from an intraday perspective as well, you would start to look at the 243 and the 81, right? So more from a T-minute. So this is kind of where we are. So you get some setup here where you get the a rejection from a 5 minute, you get a shift and fair value gap. You could look at equilibrium, something here. You have these kind of equal lows as well. And depending on what you determine which algo may be running, you could look at how that moves into the stealing range. And then somewhere over here is where those targets that I've on the upside looked at from an extreme perspective. I'm still not thinking this is where we are going. Okay, drawn liquidity wise. So it will be potentially internal. No, I feel. So we might end up with a inside candle on the week. This. So, um, so yeah, cool. If there's anything, just maybe in the Goldbach channel, we could. And if you have trade ideas as you get them, then you can post it in that channel, and I'll be happy to maybe look at it and tell you. Again, always TP at equilibrium and then have any runner if at all uh, you desire. So always, if you get that you know um, manipulation here or stop run here, or it's coming back into the range, you get the order block, you get your fair value gap, and it has not reached equilibrium and it's coming, then you have to take that entry, cover the low, and look for equilibrium. Okay, that's almost guaranteed. But again, it has to be ideally within the quarterly cycle that you reach it. Otherwise, if it's somewhere here, you should just keep it on break even. And then if you want a runner, you could look at some targets. Of course, you won't take TPs in between. But yeah, I guess that if you're playing with this strategy, then you cannot have a situation where you're running, let's say, on this particular, uh, you know, uh, let's assume that this is the 81 bodies are meeting and it's a 1 minute in a New York session. Then using Goldback, you have to take this setup. You cannot say that, okay, something happened inside and I have a fair value gap. I have an low over there. I'll just take that and no, that's not the thing. If you are working with this, either only use it from a direction bias perspective. If you are going to technically take any trade, In Hoppy's book, there are different methods to do it, but the best method and the clearest one, which aligns with how we do it in the channel, it will be this one. Right? So you will have your uh, direction, bullish or bearish. You will have the hopefully an SMT. You will have the AMD X thing somewhere is where you are going to place it. You will have that uh, run lower and then Fair Valley gap. So that is always going to be end up in wherever the Fair Valley gap is, as long as majority of it is inside, right? You will still take your limit order there, not where the Fair Valley gap starts or no, exactly at that line limit order. So your risk to reward will be 1:9 always. All right, you could try if you have something that you see on the left which is reaching here or maybe NB, but definitely go here and try to take max position, break even, whatever. Once it goes through, then maybe you can even go. Actually, a lot of times it will come to liquidity void. CE of liquidity void should not be reached. Even if it goes and suddenly it's coming down, it's not going past that. So you can cover some costs and commissions uh, below the CE level of the liquidity void in the expectation that it will go past. Okay. And of course, if you're doing it on the 90-minute cycle, then you need to plan your exit from that perspective also. If it's going from one cycle to the next and there is another manipulation happening, chances are that a new um, something run is going to happen.